How's it going, everybody? This is BeatTheBush. Today I'm going to show you how to fill out your W-4 form properly so that you do not owe the government any money and that you do not get an excessive tax return at the end of the year. This is anywhere that is more than $1,000. It's generally not a good idea because you're essentially giving the government a loan of $1,000 or so for the whole year. Now, if you stick this in the bank instead, well, you're going to easily get a guaranteed of maybe $10 or something for that $1,000. For people that owe credit card debt, this is a really good thing to do because if you fill out your W-4 form properly, you're going to get a little bit more money back so that at the end of the year, you don't get that big a refund. But whatever extra amount that you get, if you have the discipline, you just shove that right into your credit card, start paying it off. And this translates to not paying a lot more interest in your credit card debt, which can mean a lot more money than putting it in a savings account where you only earn maybe 1.2% these days. This amounts to like about $10, $12 a year. On the other hand, if you do what I say, and instead of paying 20% interest on $1,000, this is essentially $200 of free money. So just doing this little bit of money shuffling where you get more money now and less of a refund later, then you're essentially getting free money. You're not paying the credit card as much. Some people actually prefer a large tax refund sometimes because they treat it somewhat like a bonus where they get it and then they think it's free money so that they can spend it on wherever it wants. It's kind of like a savings program with the government where you're leaving them extra money and then at the end of the year they give it back to you. Now, if you prefer to think this way, sure, but then for the privilege of having them hold your money, you're essentially losing a little bit yourself in terms of interest instead of the opportunity costs of spending it somewhere else that would save you much more money. Now, before I show you the charts, which is really, really boring, it has all these lines, tells you instructions after instructions. Oh, do this, subtract this from this, and then if not this, then do something else. Before we get into that, let me just show you the concept of what this W-4 form is trying to do, is figure out how much tax liability you have. And this differs based on how much deductions you have. The deductions means you can lower your income by a certain amount, and that deduction, that part of the income, is not taxed at all. So then if you look at something like this is your total income. You have a standard deduction here that everyone qualifies for. So everyone that earns a certain amount of money, this standard deductions get subtracted off of your income. So if you earn really, really little, well, you won't get taxed at all. The itemized deduction comes in when you have deductions. There are various kinds, maybe home mortgage interest is one of them. And if you add up all this stuff up and it's more than the standard deduction, then you would be better off using the itemized, but it's a little bit more trouble in terms of your taxes. So in this graph here, if your total yearly income is this big black thing right here, your itemized deduction is this orange thing. This gets lopped off and only this part gets taxed. So over here, you see the tax income. This is the portion of your income that's actually taxed. So let's say you're at a 25% tax bracket. If you tax this whole thing, it would be a little bit more, right? But if you just remove the deductions and then you only tax this part, then you're gonna pay a little bit less taxes. And the remainder part of it is what you get to keep. Now, the W-4 form tries to anticipate how much taxes you're going to have to pay at the end of the year. And then it sort of does a really rough rounding. From what I can see in the forms is roughly in increments of 1,000. So it's either you're going to get at zero, the most far off it can do is probably $1,000. The W-4 form is an estimate of how much taxes you're going to owe. And there's a thing called allowances. And this is what you're trying to calculate. How many allowances do you have? And the more that you have, the less taxes that you're going to pay every single paycheck. Now, you can't just make this up. You can't just go, oh, I have 20 allowances and then you pay really little taxes, because at the end of the year, if you end up owing the government a lot of taxes, you're going to have to pay a penalty on it. So it's best that you try to get it so that you pay them a little bit more than zero. Most likely, you can't hit it right at zero because things are going to change a little bit, but you just want to go over it a little bit, go over zero, but under 1,000 generally. Now, this is the W-4 form. It has such fine print on it, you can barely read this stuff, but basically what you're trying to do is find out how many allowances there are over here. At the end, you just put one little number over here to show how much tax that your employer needs to take out every single paycheck. Now, this number roughly goes from 1 to 20 or so. Usually, you're going to put something around something between 1 and 10. 20 would be a bit extreme. Now, you basically go through this whole form, read each one of these, and figure out if you apply. You can enter one here for yourself if no one else can claim you as a dependent. This means that on someone else's tax form, if they claim you as a dependent, then they can take some tax claims on you. So if no one else is doing this, then you can go, okay, it's 1. So this means already over here that this is at least going to be 1 over here. If you're single and have only one job, you can enter 1, okay, over here. If you're married, have only one job, and your spouse doesn't work, you can also put a 1. Your wages from a second job or your spouse's wages or the total of both are 1,500 or less, which basically means you can have a second job. It's just that you can't earn more than $1,500. And then if this applies, then you can put another 1 here. Each one of these allowances means that they're going to take less taxes off of your paycheck every time you add another 1 here. I am going to go to that worksheet in the back where they recommend you to do that if you have itemized deductions. Something that really confused me the first time I filled this out is that over here in number 7, I claim exemption from withholding for 2017, and I certify that I meet both of the following conditions and exemptions. Now, exempt means that you do not have to pay taxes. Now, you might go, oh yeah, why don't I write exempt here so that I don't have to pay taxes? Well, exempt is for people that has no tax liability for some reason, and most people are gonna have to pay taxes. And if you're working for an employer, you most likely are not exempt and you're going to have to pay taxes. So don't come over here and write exempt on here. You just leave this empty. Now I'm just gonna go, yes, I am head of household. At least $2,000 of child or dependent care expenses. Nope. Number of dependents. Nope. No spouse. So 1, 2, 3 over here. If your total income is between this and this, put 1 for each additional child. There's no tax. There's no child. I don't got childs. Add lines A through G. So 1, 2, 3. So over here I got 3 already. However, over here it says if you plan to itemize or claim adjustments to income and want to reduce your withholding, see the deductions and adjustment worksheet on page 2. Reduce your withholding is the key here. We want to reduce this amount that is taxed, that's taking away from your paycheck, so you can use it now. Now this is the second worksheet, so I'm just gonna go over here and we're gonna look at this. Now over here is trying to quickly find out how much deductions that you're gonna have over the whole year. This is assuming that this is deductions over and beyond your standard deduction over here. What they're gonna end up doing is take this deduction, divide it by 4,050 here. So you see, this is an increment of 4,050. So if you are just slightly under every chunk of this, then you're gonna have to round down instead. This 4,050 kind of implies that your allowance is in increments of $4,050 worth of deductions, which means if you're in the 25% tax bracket, every notch you change this, if you change it up by like 1 allowance or down 1 allowance, you're going to change the tax refund that you get back by about $1,000 or so. This tells me the granularity of this tax form. So over here as an example, let me just say 26,350, okay, as a deduction. The deductions, you have to add up stuff like qualifying home mortgage interest, charitable contribution, state and local taxes. Now this is how much state and local taxes that you're gonna pay in 2017. Medical expenses in excess of 10% of your income. A lot of times if you do TurboTax and you look at your medical expenses, it's always gonna ask you to go through this exercise of trying to figure out how much medical expenses that you have. The shortcut is, if you know your medical expenses is way under 10%, you don't even have to do that worksheet, because it takes a lot of work to go through that worksheet and then find out at the end. It's like, oh, okay, yeah, you only spent like 2% of your medical expenses, so you don't qualify. So watch out for this 10% of your income thing. And then it goes miscellaneous deductions. Yes, there's other kinds of deductions, and the list goes on and on for the type of deductions that that can add up to this number. So I have this 26,000 something. If I say, you know, their standard deduction 6,350, and you're supposed to subtract these two, so I got 20K over here, and then you're supposed to add in any adjustments to your income, negative adjustments, I assume, and any standard additional deductions. So these are, you know, you're just adding up more deductions of other kinds not included in this stuff over here. So I'm just gonna put nothing. Add lines 3 and 4, 20K. Enter an estimate of your 2017 non-wage income, such as dividends or interest. Now, this stuff is non-wage income, which is in addition to your regular income. So dividends or interest, most people won't have that much of it. But let's just say, you know, $1,000 here. So this is basically if you earn any kind of dividends from stocks or interest from those high interest yielding savings account, then you gotta subtract it from your deductions here, because basically you're making more money. So now I go $19,000 over here. Divide the amount by 4,050. So it goes into this 1, 2, 3, 4 times. Enter the number from the personal allowances worksheet line H. So before I said 3, so add lines 8 and 9, so then I have a total of 7 here. So you see throughout this whole thing, I don't know why they made it so complicated, because they go, oh, okay, deductions, right? Standard deduction, subtract the 2, and then over here it goes more deductions. Why didn't they put this over here? Okay, and then it got you to add these two together, which you didn't have to do. These two lines didn't need to be there if they just kind of moved this over there. I guess they might need this dividends and interest thing, subtract, divide. Okay, so we could have simplified this form if we move this over there. And yeah, so I guess that's how I would simplify this. Over here on the bottom, you have a different kind of worksheet for two earners, multiple jobs. If you are one person and you have multiple jobs, then you would fill out this thing that's more complicated, and you got to go through, you know, these little chart things over here to, you know, look up how many numbers that you can fill out over here. I'm not going to do this, but you get the point here. You're just trying to figure out how much deductions you have. So thanks for watching this overview of the W-4 form. I hope this helps you fill it out properly so that you're not giving the government a big loan throughout the whole year. If you're interested in supporting this channel, don't forget to check out my Audible link down in the video description below, where you can get a free audiobook. And if you're interested in supporting my channel directly, I have a Patreon over here where I give various perks at various contribution levels. And as always, don't forget to subscribe to my channel over here and click that bell icon next to the subscribe button so that you get a notification whenever I upload a brand new video. Thanks for watching.